Hey guys, welcome to special session recap webinar by Admiral Markets. My name is Tarantula. I will show you potential setups on four currency pairs, mainly euro dollar, pound dollar, Australian dollar, and euro Japanese yen. Just before I start, I wish to introduce my colleague Mr. Mikhail Onokhov, and I want to apologize for potential background sound problems because we here in building there are some works going out, so maybe you will hear some thumping and some noise. But I think it will be all right. I have tried to mute it as much as I can. So welcome again. Now I will present microphone to my colleague Mr. Mikhail. After that, I will show you special setups we have on those pairs. Last week it was very good, very fruitful. Hope this week will be too. So Mikhail, you can continue, and after he finishes, I will continue with the recaps. Thank you very much. Seems like we are having some problems again with the sound. I don't know if you can hear Mikhail. I cannot hear him. Okay, guys, seems like we're having problems again. Okay. Well, don't know what's happening with his computer, but it's a pity because he has a lot to say, but I think that will be eventually solved out. Guys, so if you hear some thumping background noise, just try to ignore it. I try to ignore it as much as I can. So our last session recap was basically around dollar, pound, and yen because we have ignored Australian dollar. If you remember those setups from 4th of October, and I have warned about potential breakdown of euro dollar. Well, basically it was happening after NFP, also FOMC, it was dropped down. Well, after NFP it was dropped really a lot, so we couldn't have had much around the euro dollar except some small scalps that were very fruitful around those levels, but eventually for positional trades you would probably got up with break even or with small profits because on NFP the pair was really dropped down. Cable was a lot better, and that was a buy towards 59.50, 59.30, and I remember that we have had on the webinar. Here is the cable, and actually we went here in this candle when it was a live candle while it was forming. I have warned about potential setups, and this was the level where you could have bought 4th of November, 4 o'clock, right? We were having webinar about 6 o'clock, so later the price went up and then it went downwards for you to have a better buy setup. And around those levels, 59.50, 59.50. Oh, sorry, this is for today. We stopped around 58.80. It was a bit of a stop target in 60.20. 60.20 was indeed a very good target, but it was violently broken, and the dollar went and the cable went really far to test 61 above all expectations. But if you have long it here, well, you could have got some 70, 80 pips. Then what we had, it was basically Aussie, stay away from Aussie, cash rate announcements, so Aussie and megaphone pattern, and Euro Japanese yen accumulation triathlon for our time frame. I told you to wait for BPC pattern in any direction, bullish bias above 133.35 retest, and actually we can check that on charts. Euro Japanese yen, this candle was that candle, and basically we waited for breakout in any direction. I was, well, even if it went here, it didn't break it, but bullish bias would be supported some retest of this level, but it didn't happen. It went straight downwards on 5th of October. After our webinar, we can zoom into lower time frame to see this is the candle where the triangle was broken, and on 15 minutes we can see breakout, pullback, continuation. So not much, basically. Breakout, pullback, or retest. So if you have shorted it on a very retest, you could have got some 70 pips. Yeah, 70 pips. If you have shorted it on a very, let's say this is retest, but pullback was here, breakout, pullback. So this was potential shorting area. So you could have been good for some 35 pips. If you have shorted with a classical breakout, pullback, continuation. So continuation was around just below this level. So some 35 pips. So even more if you have shorted it around this top. But yet again, we have waited for that breakout of the triangle with trigger happy trade even more, but that was it. So if you have exploited those setups, you could have some nice pips around those levels. Today, bank holiday. What do we have today and tomorrow? Risk disclaimer, of course, prior to any potential webinar, any recession recap. So by viewing this risk disclaimer, you agree to proceed further and accept all the risks associated with Forex market. Okay. Market plan for euro dollar. What do we see on euro dollar today? We see it in downtrend, and this is big downtrend. Okay. This was caused by the FOMC, by NFP, great results. But you know, guys, if our target is around here, which indeed it is, 32.75, 33, let's say, I would like to sell it higher. I would like to sell it higher, and if you remember my analysis for today, this was the setup. And you see, possible zone and perfectly, 34.12. Camarilla MACD, my proprietary system, no system, sorry, method. And here we had some shorts, 10, 15 pips, but hard to have more pips when we have low volatility, because you know, when banks are on holidays, we cannot aim for big money, okay? We cannot aim for big money because we don't have so strong buyers and sellers. Now we retailers work, institutional traders work, but real movers are, as I always speak, big money, big funds, big traders, institutional traders, big strong money companies, everything. So banks not working today, French and USA banks. So basically, I would like to see it. So we could have sold it here. Exactly. When I wrote this, it was possible distribution, and indeed it's a distribution zone. But for potential setups, let's say for tomorrow, I wouldn't like it to sit here. I would like to see it higher. Now this was today's setup. But for tomorrow, I would like euro dollar really to get a bit higher, guys, if you ask me. I have a confluence around 34.50. Okay, that is my confluence. 61.8 retracement. Now I don't need to describe, this is basically an accumulation period prior to markdown, which happened here. So what I want to see is another good retest of 34.50. It can be a little bit lower. It can be 34.30 because if our ATR is 34.40 and 34.50 is 61.8 retracement, so we could see 34.30 just below this level, around this 50% of retracement below this week. So I would really personally like to see it higher. Okay, so we can sell it later. So that is my idea. Sell around 34.30, 34.50 with stops around 35.20. For positional trade, I say this is positional trading, targeting 33.00. Eventually, if you see strong momentum, that stop should be around 35.50. That means that stop, final stop. We don't move, but when do we use that stop? Let's say that the price spikes to the upside, and you know that is a fake movement. You presume that is a fake movement. Then you just need to move your stops around 35.50, above this level, guys. So this level is protected heavily, 35.50. Okay, this is level which is protected heavily. Would like you to see it up, but I don't want to see it straight downwards. I would like to sell it higher. When we talk about positional trading, if you use 80, 100 pip stop loss, you need to have a good money management. Don't risk more than 2% of your account, okay? Try 3 at the most, but don't risk it. If it's only trade for you, then it's 3% maximum. But if you have open positions around, I don't know, for maybe other currency pairs, then just include that risk management into your portfolio, okay? Just don't do strong. We have big stops around there. So if it happens that we have a nice retracement to the upside, we don't want to see it up the 35.50. I want to see it around here and then 33. From this perspective, it can be achievable, okay? What is market plan on cable? It's in, well, this is a mistake. Now we have a downtrend. Downtrend. Why do I say downtrend? This is downtrend. This is strong correction, which spike up some stop losses, which were held from this break of this neckline. So probably some traders close their positions around there because we have substantial buying. We have a spinning top candle, and some traders got spiked out around here, breakout, pullback, continuation around there, sellers, sellers, sellers. So what do we want to see? 60.23, right? Look at this red level. I have told you many times about 60.23. Look this, look at this, look at this candle, this candle. How it perfectly rests to 60.23, okay? So, why wouldn't we have another potential setup? I don't say that this will touch it to the peak, okay? But so far, reactions have been very good. Sell around 60.23, 30 with stops around 67.5, targeting 59. This is also level which is protected and it's strong. I'm not sure today those holidays are just playing with us, so I'm not sure if we will have a big spike to the upside. But let's say we need to wait Would you short it around here now? Of course you wouldn't, because it's too low. And we are talking about 4-hour time frame, and we are talking about positional trading. We don't talk about scalping trades now, because scalps are different. You can short it there, all 59.70, got some 10 pips, I don't know, and get out. But if you want to achieve, if you have a, I don't know, a bigger account, or you cannot trade each day, or you want to have, of course, one bigger position, so then you need to wait for a retracement, okay? Retracement, I would like it to sit here, 60-20, 6, anywhere from 16-15 to 16, sorry, 60-15 to 60, basically 30. But I pick this level because it has it has been tested so many times in past, okay? Stops around 67.5, targeting 59. That stop, move that stop. If you have opened your position, that stop should be around 60.95. I don't want to see pound above this level, guys. I don't want to see it. It's too much, then it will be whipsaw, okay? Bam, bam, bam. Don't want to see it up there. Want to see it around here, possibly jumping on some news and then tanking down, of course. Don't want to go up there, because that will make potentially, well, a probable W pattern and asymmetrical head and shoulders inverted. Shoulder, head, shoulder, inverted asymmetrical head and shoulder with W pattern. So wouldn't like to sit here. For sell setups, around there, stops 60.75, possibly protecting it if some big spike happens, and then go down, okay? We want it to see down, okay? Cable, no particular pattern on 4-hour time frame. That means we don't have any particular pattern that we can put our chances. So what does it mean? If we have head and shoulders, our percentage to win is, well, when we enter the market, it's 50-50. If we see a substantial pattern, our chances rise to 70-30. Now we don't see any particular pattern on 4-hour. It may be that this is indeed a correction, and it needs to correct to the upside. If it isn't already happening. But I'm thinking logically, why would it happen on bank holiday? Okay, banks know what we are doing, and banks protected those levels by stop orders. Retail and some institutional traders are not strong enough to push it around here. Even if banks do not defend levels by themselves today, they have, of course, put some stop orders around there. So if this level breaks, it will collect some stops to the upside. But are they dumb enough? I need to say dumb enough now to say, let's short it around there. So we need, as for euro, let's find a better retracement to sell it higher, of course. Okay, so that is why I'm counting on this level. Let's see it higher, okay? It's always better to short into resistance than to long it. Of course, if it isn't breakout, bullback continuation or something like that. So if I see head and shoulders there, that's not 70-30 chances, okay? If I don't see any particular pattern, let's say 60-40 chances, but this level is double top levels. It should be defended, okay? What about Aussie then? And of course, 60.93, that is why I'm saying that stop around 60. If you see the spike, of course, let's show you what does that mean on cable. You know how cable reacts to levels. When you see a substantial support, the cable on news, it goes like this, and then on the good news, it goes like this. And then it retraces down to follow a trend. Sometimes on bad news, it reacts like this. So if something happens for cable, I wouldn't like it to spike up a lot. That is why we need to have wider stop. Wider stop, okay? 60, 75 should hold it. But on some good news reaction, it might spike to the upside. That is why we want to protect ourselves, okay, guys? We want to protect our equity. Would like to see it there and, of course, the downside. Aussie, Aussie, Aussie. What is this on Aussie? We see a nice down channel on Aussie. You see equidistant channel. So what is my take on Aussie? It's in downtrend. It's formed a downward channel on 4-hour time frame. Okay, 4-hour time frame. Aussie has formed a downward channel. So sell around 93.75.80 with stops around 94, targeting 93.15. And now there is a slight problem maybe with Aussie. Why? Because maybe the move is already happening on Aussie. I'm not sure if we will get another spike to the upside. This is mark down. This is accumulation. This is basically when orders have been accumulated. But this candle is what is worrying me. It has passed through 93.75. It's such like butter to a knife, you see? And it even broke this low. So when I see this low accumulation, bang, to the downside, level has been broken. Indeed, it should come to 93.13, 15, 10. But where should we enter? Too low for now to enter. Would like to see it higher. But as you already know, it doesn't have to happen always. So for setups, especially if you guys do those setups on higher time frames, okay? You need to be very patient, guys. You see euro now. Euro is again. Let's see it on euro. What is happening? I just closed my scalping trade on euro. You see how it reacts to our zone. Let's switch to 1-hour time frame, eventually 15-minute time frame. When I made my analysis today, this was our entry point around here. I told you to wait and then to short it. The height was 34.12 and euro was dropped around this high. It was dropped to 33.96. So you could have made some 20 pips. On low volatility day, guys, 5 pips is super. 10 pips is great. Because I presume that you don't trade Asia sessions. So in London, what could you trade it in London? You could have traded some strange range. This is too much of waiting, okay? We need volatility. So short and go. Now we have a higher high. This candle has formed a higher high, W pattern. It should come to test this level. And then I'll be ready to sell it around 34, 30, 34, 50 for a nice drop to the downside. Why do I say drop and don't go long? You see, again, 34.12 is reacting like a pro. I really like it here. I really like this Camarilla setups and based on ATRs, candlestick patterns. Now it's distribution. You see distribution. After the distribution in market cycle, we have markdown after the markup. I will write this for you so you would understand what I mean. Okay? Let me make a quick, how can I say, it's not like a little bit of, let's far a little bit from our webinar, just to know what I'm talking about, okay? So, market cycles are basically, the first phase is accumulation phase. Accumulation in Forex market usually happens in Asia market. And you see the accumulation like this. Prior to London session, we have basically spikes. Frankfurt fake probably, and usually if gets ready for London. So if we have a potential uptrend, Frankie fake will drop the price and then London will spike it up. You have probably seen that a lot of times. So accumulation phase starts in Asia. In Asia, guys. Look at this. This is all accumulation phase. And now look at this, guys. 6 o'clock, okay? 6 o'clock. What do we see? Mark up. This is called mark up. One of things I teach is, of course, 4 market cycles and how you can exploit it. And of course, markup is very important. So usually for intraday trend, we have second phase of market cycle. I'm talking about intraday setups. And usually market can also go, and it goes from accumulation to markup or markdown on weekly time frames. But today it was markup. After the markup, we have a distribution phase where sellers kick in. So I will show you that also on charts. Distribution phase, when sellers kick in, it's a completely different story for downtrend. Accumulation, markdown, distribution, markup. Now it's accumulation, markup, distribution, markdown. This is basically accumulation. This is distribution phase, what we had today. And I wrote that on my analysis. After the accumulation, we have markup, then we had sellers. How do we know that sellers are kicking in? By weeks. Week, rejection, week. So then what should we do? We need to find those levels to the upside where markdown would appear. So after sellers kick in, we need to find levels for markdown. That is always like that for market cycles. Of course, the higher time frame, the stronger it is. But for intraday setups, we can concentrate on 1 hour time frame, 15-minute time frame to see it perfectly fine for 4 of those market cycles. Even 4 hour can be good, but only if we have a good volatility with strong news, because news will also push the price. So accumulation, markup, distribution, markdown today. So that is why I was thinking about shorting it at this level, around 34.5 and 34.17. Look at the height of this candle, 34.16. What did I say on my analysis? 34.17. And that was 6 hours ago. Also, if I see this level, 34.40, I would sell it, of course. It completely stands along with my analysis. And now you see the sellers. Again, they have been rejected from the tops. So those are 4 market cycles. and it's same for every market. Accumulation, markup, distribution, markdown, accumulation, markdown, distribution, markup. Okay? Now you know, because some people were confused on this analysis, and I trying to explain. Also, this is important point, this is important point, this is what this pattern is called. It's called tweezers. Okay, tweezer pattern. See? Bang, bang. On support, Camarilla, L3, also ATR projection, also retracement on MACD. This is building histogram that indicates momentum. This is weakening histogram that indicates retracements. This is complex trading method. I cannot explain it right now, but I really like it, and I really am proud for those setups which I've been doing last couple of months. Usually, I just know it happens usually that analysis are just fine, but I think this gives me an edge because the levels are perfectly in confluence with my red levels, and Camarilla is really awesome for trading. So it doesn't mean that I have switched my way of trading. Let's say from these analysis on like this, those are the same, but I'm based on Camarilla. I know that method in my head because I have invented it. I have it in my head. So it's not a problem to see those charts and speak like this. And I use it for intraday setups. This is only for today, okay? And this can be valid even tomorrow, okay? So, okay, if some of you shorted 34.16, now you have again 10 pips. And I'm saying you guys, you can scalp on low volatility days, but not make big strong positions. So yet again, this is a false breakout, okay? Camarilla MACD works great on ranging markets also, because you can short it, long it with low risk, and those are markets when there is low volatility, when banks are on holiday. Again, let's switch to Euro Yen. I have made a lot of digressions from our main subject today. But I know that many of you would ask me, what are market cycles? How do you calculate it? No calculations. You need to have a knowledge for it, okay? So last setup was this, breakout, pullback, continuation to the downside. And now look at this, trend line broken. Again, this is not so good for us, because we are already in correction mode. And now what would I say to you on Euro Yen? We have this webinar is late for good setup on Euro Yen. If we had this webinar a bit earlier, I would tell you to go long here, because I have a trend line, I have a correction. This is the first swing, red level, and trend line above red level, breakout, pullback, continuation, switch to lower time frame. Look, this is perfect, guys. And when I say perfect, this is perfect breakout, pullback, continuation. Look at this breakout here, and look at this pullback and continuation. Let's switch to 15-minute time frame. Breakout, pullback, continuation above this high. 132.88. Let's say 132.90. And look at this candle. 20 pips with very low risk. This is red level. It would hardly be broken. So some 15-20 pip stop loss for basically, well, it could have even touched this level, 133.34, but also euro dollar needs to get higher Today we have positive correlation between euro dollar and euro yen, okay? Also, we will have a special webinar about correlations. I think I will do that with my colleague Chris. I think that we will have a webinar about those correlations, and I will show you how you can use those correlations to your advantage, of course, because you need to know about currency strength also. So look at this, perfect pullback, breakout, pullback, continuation. But unfortunately, it was happening there. Now it's 635. So it's hard to imagine that this will again test it to downside. Maybe it will be an Asia session, but what I have prepared is this position sell around 133.35.50 with 25 pips stop targeting 132.60. Again, I don't see any particular pattern on just correction on euro yen, okay? I see this bullish pull, breakout, pullback, but this is counter trend. This is all counter trend. So any good setup would be here. I would like it to see it around this level and then bang to the downside, because stops are small. 25 pip stop is nothing for a potentially good trade. Targeting this level. If it alternatively, what can happen is, what I say, don't predict, just react. So you don't use, just react. If I say that, that can have an alternative, because now it's present time, I just don't know where will it happen. This is not guesswork. I am a technical analyst. I am a full-time trader, so basically I trade what I see, okay? And what I see is that we can have a sell around this level, but we also can have a long around that level. Why do I say that? First, this is short. This is bearish market. Okay, this is bearish market. And now I want to see it around this red level, because we had historical sellers around this level. Look at this, wicks here. Look at those wicks around there. Those are all historical sellers. And when people see historical sellers, they would govern by the feeling that again the price will be rejected around those levels. Of course, what can happen is a rejection, but because market is not following us every single time, we can have a potentially long setup. So what should we concentrate on? Retest continuation on around 33.35, or potentially breakout pullback continuation. On a practical spreadsheet, this will look like this. We have our level, it's 133.35, 250. We need to allow some slippage, okay? So what can happen is the price when come to here, retest this level, and if the candle started from here, this is retest continuation. We short it around there. For you who want to take basically a little bit of risk, we can short it here. But usually if this candle retested it, and if this candle breaks to the downside, that means that the level has been retested, it will proceed to the downside. So you can try to short it on that candle. But what I would suggest is basically, and we don't get lower than 1 hour, so this can be 1 hour candle, not 15 minutes. You can just zoom in to lower time frame to see a better entry. But let's say this is 1 hour candle which wants to retest this level. It retested, but then it was dropped, and basically we can short it just 2-3 pips below this candle. Or what can happen is also, we can have a breakout to the upside, then on the next candle, we can have a pullback, and then what we are waiting for, 2 or 3 pips above this breakout candle to see a true breakout to go to the upside if this level gets broken. Now I cannot say that I see my red level, okay, and that is why I'm pointing you towards 33.35. Anyway, if this level gets broken to the upside, we can really have a nice, potentially good trade for some 15-20 pips, and then you can close it or you can put it to break even, okay? Hoping for a next touch of 133.99, 34 basically, 00, because that is, I don't have some in-between levels. The only thing I have here is 32.75, 72 high. So if we get this break out of this level, it can be even 30 pips. If this candle gets broken, this will surely be touched, okay? So you need to have a nice money management, of course, here, nice trade management. But what if this zone around 35 gets rejected? Then it's safer to sell, of course, around 35, 50 with 25 pip stop loss. This is not breakout pullback continuation. Let's clear this now so you are not confused. Okay, now you know what this is. Breakout pullback continuation. This is not breakout pullback continuation. This is retest continuation. Retest continuation. 2 pips below. Retest candle continuation. So this is retest. Continuation is below this level. You draw a line, and this is continuation. 2 pips below this candle. Breakout pullback continuation is 2-3 pips above this level. Breakout pullback continuation. It's N. It's zigzag. Okay? And this is U-turn. Trend collapse. Okay? Important for counter trend trade. So, bullish breakout pullback continuation or sell at high or a retest. So I will just add a line here. Let's make it like this. Erase all ink. Sorry for this. Or retest of 132, 33, 35 selling 2 pips below retest candle. Okay. If it happens to come here, we open 1 hour time frame. Let's wait for next candle. If it comes around there, slowly grinding to the upside, and then bang, sell below the low. Or if you see the reaction like here, around those levels, you can take a sell with very low risk. If breakout happens wildly above this level, then wait for a potential pullback and continuation. I know that breakout, pullback, continuation are safer, but still this is downtrend. So we need yet to see whether this level will be strong. But I presume it will be good for a scalp swing, at least for a scalp swing, guys. Okay. So if you have any further questions, now is the time to ask me. We have come to the finish of this session recap. Tomorrow we will have, okay, this is what I was saying, CPI. So for cable, this will be a day tomorrow Let's see what will give us. That is why I'm counting on shorting, and why you need to have those stops a bit higher because of this news. If this news comes better, we will have a spike to the upside, okay? So there was that. This was bank holidays. So no big trades today. But here again, this day has been good for scalping purposes. Okay. Now you have setups. You can be safe because you know about money management. You know how many lots you should trade. And I will be back very soon. Me and Chris, let's find it. Where is our next webinar? Okay, education webinars. Chris will have his webinar tomorrow. Intraday and price action trading. Stop loss practical examples. That will be important for you all. Even if you're experienced or you are a new novice trader, stop loss will save your account. So be sure to attend the webinar along with me. Then we will go how to plan your trades, me and Chris, and again, of course, every week session recap. Okay, so sign up for those webinars. We expect you, and I hope that these setups will be, of course, played out as last week's setups. Now I have a question. Can you, Nenad, please show euro-dollar setups? Of course. Euro-dollar setups. Support 33.85, 33.50, 33, 34.50, 75, 35.15 resistance levels. Correction on 4 hour. So my setup should be still around 34.50 with stops around 35.20. Mind you, this is 80 pips stop loss with potentially 120 stop loss. Now you know how to plan your trades. You cannot go with very strong trades when you have so big stop loss. But this is positional trade because target is around 33.00. That is basically 130, 150. I would like to see it here on euro dollar, anywhere in between those levels. I have a confluence here around 34.50. We have a previous retracement. We have a lower low here. So I would really like it to see it somewhere around 33, 30.40, and then sell it to the downside. Okay. Of course, the stops can be just about 35.50. But if we talk about positional trades, then we need to move that stop a bit. That is for euro dollar. Gold, I don't do gold anymore. I have basically never traded a gold because gold is very volatile. It doesn't follow technical analysis so fine. You can trade it. I'm an honest guy. I just don't feel very sure to trade gold. I know that many traders ask me, but you know, I'm currency specialist. I like to do technical analysis on 4 majors and of course many other pairs. As I know that most of traders trade basically those pairs, currency pairs. So I do analysis for Australian dollar, New Zealand dollar, Australian dollar, Japanese yen, Canadian dollar, Japanese yen. So basically I don't mangle with gold. Gold is too fast. Again, for trading gold you need to have, of course, a good support, or you can trade it if you do, for example, with investor accounts, because I also have been doing trading on institutional trading accounts. Those are big accounts, and when I trade on account which is basically 200, 300,000 dollars, or as it was last account which I was traded on, it was basically in Great British pounds. You can do gold, but that can be very, very, very dangerous to your account. Me and my colleague managed to basically, we together, but it was mostly him because he was scalping that account a lot. But I have contributed also to that account, and we have basically grown, we have built an account from, if I remember correctly, 30k British pound to 70k British pound in a single month. And then my colleague took a trade on gold. I remember that trade on gold, and we lost 50% of our profits in 3 minutes. And then we have agreed that we never take any gold trade. It can be pretty rewarding, but it can be very, very dangerous. Even on 10k accounts, you need to do it with 0.1 lot, mini lot, okay? That is why I just don't feel very sure with gold. That is why I don't do it, okay? Maybe I would include that in my analysis, but not for the moment. Maybe you will see me include these pairs also, Euro Swissy, Euro CAD, Euro Dollar, Euro Australian Dollar, sorry, GBP Swissy, because I have all red levels for these pairs. So maybe we will see that. But for the gold, not at the moment. Maybe in some future. So okay guys, if you don't have any questions, we can conclude this webinar. You see again, Euro is rejected of that 34.17. This is very slow day, but those slow days are only good for scalping, not for positioning. Tomorrow the things can change drastically, so let's see. I wish you very good week, very pleasant day, many green pips to you all, and hear from you very, very soon. Be sure to sign up for following webinars, because they will be very, very important. Thank you guys. Thank you for your comments. You can follow us, of course, Admiral Markets on Twitter, on Facebook page, on our blog. If you know where the blog is, I also make analysis there. It's on Tarantula FX daily analysis. Each day the same thing. Intraday analysis. They are hardest to make, but I know that you like intraday trading, so that is why I come with intraday. That is my specialty. Thank you very much, and thank you again. Have a great evening, everyone. Goodbye.